Hello and welcome to the look ahead for Wednesday, the 24th of April, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, as far as the economic calendar is concerned, overnight we have inflation data from Australia. Then tomorrow we've also got German IFO sentiment figures, Canadian retail sales, and US durable goods orders. As far as earnings are concerned, some of the big names to be watching out for tomorrow are Lloyd's, Meta, Boeing, IBM, as earnings season continues to ramp up. But let's just start with Meta and our expectations. So EPS is expected to come in at $4.31. That's up from $2.22 in the same period last year. And that's going to be on revenue, which is expected to come in at 36.14 billion US dollars, up from 28.64 billion in the same period last year. Now, these results are coming through as the Meta share price has really outperformed so far this year, rallying 40% year to date. That's well ahead of the 5% gains that we've seen in the S&P 500. And we push that back to the performance over the past 12 months. Meta's up an impressive 125% compared to the S&P's 20%. Now, investors are really quite upbeat as far as Meta is concerned and supporting these recent management cost optimization initiatives. We've seen recent layoffs, and yet the price has still remained supported. And we've also seen that Meta, is very much involved in AI developments. Just Friday, we saw the latest release for Llama 3 language model and also image generative software. So, I mean, there's a lot of sort of AI developments which are going on. Obviously, we've got Instagram, WhatsApp, Reels. There are so many parts to the Meta family, as well as the sort of more traditional Facebook. And there is potential for further monetization on many of those different parts of the business, also being supported by the ads. Ad revenue is still extremely important, but also what AI is doing towards that AI, the ad generation and the ad platform. So that's going to be very much what we'll be watching. As far as the price is concerned, we saw that Meta rose to an all-time high a little bit earlier at the end of March, and that was at the 530 level. Has eased off back from there, but we found that it's caught support down there at the 475, which is the April low, and it has recovered. That's what we're looking for, is that continuation of that recovery. However, a lot depends on what we get from these numbers tomorrow after the close. If we get some impressive numbers, then we could see another power higher back towards the all-time high of 530 and a break above there towards 550 being the next upside target. On the downside, sellers are going to be looking to take out the 450 level the 475 in order to test the 450 level, which is that really important gap open that we saw the gap higher that we saw in January. So just continuing with what we'll be watching tomorrow, we've got, as I said, overnight, the Australian inflation data. Now, Australian inflation is expected to ease slightly to 3.5%, and that is down from 4.1%. Now, whilst that's still easing in the right direction, it's still really a little bit too sticky for the likes of the RBA to really start thinking about cutting interest rates anytime soon. Expectations are potentially for a September rate cut, but even that might be looking a little bit optimistic if we see inflation remain sticky. That said, we did see some weakening in the jobs market in the latest data. We saw a tick higher in unemployment, and also employment figures unexpectedly fell. So there could be some signs of weakening coming in there, which would obviously support the view if it continued to weaken and we saw inflation cool by more than expected, then we might see the Aussie dollar come under pressure. Now, here we've got a chart of the Aussie dollar. It has actually rebounded really strongly from that 5-month low that was hit earlier this week. Now, we've seen that the price recovered from that 0.6450 That was it's recovered above this 0.6450, which was the February low, and it's looking towards the 65 level, 0.65. Buyers are going to want to see a rise above that level in order to extend the rebound towards the 200 SMA at 0.6530. As far as the downside is concerned, I mean, buyers are going to be encouraged by that long lower wick, which suggests that there wasn't much selling demand at the lower levels. But if we do see sellers take back control on that weaker data, then we could see a retest of that February low at 64.50 and then on to the low of 63.60, which was the April low that we saw and also the 2024 low. Next on our list, as I said, we've got German IFO sentiment data, which is expected to improve slightly again, rising to 88.9 from 87. The data comes actually as we're starting to see signs of improvement and recovery in the German economy as well as the broader Eurozone economy. I mean, we had PMI data out from Germany today, which came in what mixed. I mean, we saw the service sector was much stronger than expected. The manufacturing sector is still showing signs of weakness, contracted more than was expected. But the composite PMI, which is the business activity gauge, did improve, and it was back in strong in growth territory thanks to the service sector. So that's really sort of helping to support the recovery in the DAX. I mean, if you think about where we're at the signs where there is signs of recovery in the economy, and at the same time there are expectations that the ECB could start to cut interest rates in June. So a combination of recovering economy and interest rate cuts is a really encouraging sign for DAX, for German equities. And so we, again, as far as the DAX is concerned, we can see we had that fall down to the really low level earlier this week. That saw a drop down to the 17,400. Now, again, that really long lower wick suggests there wasn't much selling demand at those lower levels. So the price rebound. And then we've seen it extend those gains. So this is a really encouraging pattern that we've seen play out. That long lower wick tends to be at the end of a downward trend. So we have seen the recovery. The recovery is trying to push over that 18,000 level, which it has today. Next one on the upside, we'll be looking towards 18,400 and above there, back to the all-time high of 18,650. Now, if we don't really get a solid move, a meaningful move above the 18,000, then we could see a retest of the 17,400 level, which would be creating then a lower low. So just moving on, we do also have, I said, when we mentioned, we've got the US durable goods orders. So we're just going to take a quick look, bear with me, at, no, that's not it, just bear with me. There we go, the US dollar. So the US dollar index, now that's actually eased off the 5.5 month highs that it has been trading at. US durable goods so far this week, there hasn't been much out as far as US data is concerned. There haven't been many Fed speakers either. So the dollar's really been drifting after those strong gains 2 weeks ago, and then it sort of drifted higher last week, but it's been supported by expectations of the Fed keeping interest rates higher for longer, and on upbeat data from the US highlighting the resilience of the US economy. US durable goods orders, they came in at 1.4% last month. If we get stronger than expected data, it's just going to add to that story that the US economy is performing well, and which really allows the Federal Reserve the pleasure of patience as far as rate cuts is concerned. So just to be watching out for. I mean, on the downside, the support there level is the 105. That is quite some way a way off at the moment. But if we do see weaker than expected data, then that's where we could perhaps be expecting to see the US dollar fall to. On the upside, a rise above the 106.50 level is going to see a potential extension of gains towards 107. Now, I hope you've liked what you've watched. If you do, then please do give the video a like. And if you would like to receive more videos like this, then please do subscribe.